Are we on the verge of a massive Ethereum-led altcoin run? Big money seems to think so. BlackRock was spotted buying a staggering $547 million in ETH in a single day, and that's not all. With the new spot ETH ETFs getting huge inflows and nearly 30% of all Ether now locked in staking, the available supply is shrinking fast. While ETH grabs the spotlight, others see huge potential elsewhere. Altcoin Daily is pointing to a potential XRP ETF that could send its price soaring, and Coin Bureau's guy lays out a clear strategy for finding the next 100x gem on chains like Solana and Base. Even security is getting an upgrade with Ledger's new self-custody recovery key. The market is moving fast. Is your strategy ready for what's coming? In the latest video from Altcoin Daily, the discussion centers on a major shift in sentiment and potential for XRP. The video points out that 11 firms, managing over $240 billion, have filed with the SEC for an XRP ETF, suggesting big money could be on its way, similar to what happened with Bitcoin. XRP is presented as a bridge for global finance, with the tech to let institutions settle any asset in seconds for less than a penny. A big part of this future is Ripple's own stablecoin, RLUSD, which has seen over 604% growth in about 6 months, jumping from the 36th to the 17th largest stablecoin. The host explains that more use of RLUSD, especially on the XRP ledger, leads to more XRP being burned, which could drive up its price. The host also admits he changed his mind on XRP. He was down on it during the long SEC lawsuit, but now sees new potential since the case was dropped. Based on this, he offers a couple of price scenarios. If Bitcoin reaches $150,000, XRP could pass $5. If Bitcoin hits $250,000, he sees XRP possibly reaching $9. It's my opinion that the video paints a very optimistic scenario for XRP, driven by ETF speculation and the growth of its stablecoin, RLUSD. The enthusiasm is understandable, especially within the dedicated XRP community. However, the path forward seems a bit more complicated. The talk about an XRP ETF is mostly community-driven speculation for now. Major players like BlackRock haven't officially announced their filing for one. Also, the legal battle with the SEC isn't entirely over, with remedies and penalties still being decided, which adds a layer of uncertainty. While RLUSD's growth is impressive, it's still a very small player in a market dominated by giants like USDT and USDC. Convincing developers and users to adopt it on the XRP ledger over established networks like Ethereum is a major challenge. The video captures the bull case well, but the real-world hurdles of regulation and market competition will be tough to overcome. In the latest video from the Crypto Rover channel, the host explains why he is making massive, multi-million-dollar bets on Ethereum right now. He points out that Ethereum is breaking out of a major symmetrical triangle pattern. This is happening as the new spot Ethereum ETFs are seeing huge inflows, pulling in $450 million in a single day compared to Bitcoin's $130 million. The iShares Ethereum ETF is ranked second out of over 4,000 ETFs for inflows, trailing only the S&P 500. He also mentions that a company called Sharpling Gaming just moved $145 million, likely to buy Ethereum after selling their Bitcoin. The video's excitement about an Ethereum-led market is definitely tapping into the current mood. The initial spot Ether ETF inflows were impressive and show that there's real institutional appetite, not just retail hype. The idea of a capital rotation from Bitcoin to Ethereum is a classic bull market narrative, and the ETH Bitcoin chart has indeed shown signs of life recently. However, the prediction of a massive altcoin run concluding in just 2 months feels very aggressive. While past cycles have had explosive endings, the market today feels a bit more hesitant. It seems to be at an inflection point. If Ethereum can smash through its $4,000 resistance and Bitcoin holds its ground, things could get wild. For now, it seems like the market is testing the strength of this new Ethereum momentum before fully committing. In the latest video from the Lark Davis channel, he tackles the big question on every crypto investor's mind. Is it too late to buy into this bull market? He presents both sides of the coin. On one hand, the cautious argument says you might have missed the boat. Bitcoin has already run up significantly from its $15,000 bottom, and basic trading wisdom tells you not to chase massive green candles. With some altcoins like Solana and XRP hitting new highs, the risk-to-reward ratio doesn't look as good as it did months ago. The video's take on the market cycle feels pretty balanced and reflects the current mood well. The idea that we're in the later innings but not the final minutes seems reasonable. What really stands out is the focus on Ethereum's potential role. With the recent SEC approval of the spot ETH ETFs, even though they aren't trading yet, the stage is set for a significant new wave of capital. This adds a lot of weight to the theory that an ETH season could be the catalyst for the next big altcoin run. The market often experiences a lull in the summer, so the idea of holding some cash and waiting for better entry points before a potential end-of-year rally doesn't seem out of place. It feels like a period of accumulation and positioning before the next major move. In the latest video from Coin Bureau channel, Guy explains that finding altcoins with 100x potential is still very much a reality. He points to the Virtual protocol, which shot up from 5 cents to $5 in less than 3 months, as proof. The strategy for finding the next big winner involves a multi-step filtering process. First, you need to figure out which crypto niche will get hot next by looking at the logical sequel to current trends. For example, the current focus on Ethereum and stablecoins points towards tokenized real-world assets, RWAs, as a likely next wave. Within that niche, you must find a simple, relatable narrative like tokenized real estate that average investors can easily grasp. The video stresses that accessibility is everything. The project must be on a fast, cheap, and easy-to-use chain. Solana and Base are identified as the most promising ecosystems for this cycle. Finally, you have to look at the market cap. To have a realistic chance at a 100x return, a coin should have a market cap below $100 million. The video suggests using tools like Grok AI on X for research and paying close attention to what key players and developers in the Solana and Base ecosystems are promoting or discussing in interviews. The framework presented in the video is a solid, logical approach to speculative investing in the crypto space. The idea of filtering by niche, narrative, chain, and market cap is a structured way to cut through the noise. It's my view that the emphasis on Solana and Base is spot on for the current market cycle. Solana has recovered incredibly well and has become a hub for developers and high-volume applications far beyond just meme coins. Similarly, Base has leveraged its connection to Coinbase to quickly build a vibrant ecosystem with a massive potential user base. The concept of narrative investing is particularly powerful in crypto. A good story often drives price more than good tech, at least in the short term. The advice to find projects with a low market cap is fundamental math that many people overlook when chasing huge returns. This strategy isn't a magic formula, but it provides a sensible roadmap for identifying projects with asymmetric upside potential. In the latest video from the Crypto Banter channel, the host unboxes and reviews a brand new product from Ledger called the Ledger Recovery Key. He explains that it's a small, card-like device designed to securely store a backup of your 24-word seed phrase. This is presented as a more convenient and secure alternative to writing your phrase on a piece of paper, which can be lost, burned, or stolen. Unlike Ledger's other recovery service, this new key is a full self-custody solution, meaning no third parties are involved and you remain in complete control of your keys. This Ledger Recovery Key positions itself in a fascinating middle ground of crypto security. For years, the choice has been between low-tech, robust options like stamping your seed phrase into a metal plate, or higher-tech, trust-based services like Ledger Recover. This product tries to blend the convenience of tech with the principles of self-custody. It directly addresses the problem of a paper phrase being easily compromised if found. However, it also introduces a new layer of complexity. Instead of just hiding a piece of metal, you're now managing another electronic device with a PIN you can't forget. The debate in the community often circles back to whether this convenience is worth introducing another potential point of failure. What if the card gets damaged or you simply forget the PIN 10 years from now? It's a classic trade-off, offering a slick user experience for those who find the manual methods too cumbersome while still keeping you in control. In the latest video from The Modern Investor, the host explains that the crypto market is seeing an unbelievable buying spree from wealthy individuals and institutions. This intense demand means that any price dips are bought up almost immediately. Analysts are split, with some predicting the final leg of the bull run will happen around September or October, while others see the cycle extending into 2026. The main focus, however, is on Ethereum. BlackRock has been aggressively buying ETH, with one report from Arkham Intelligence showing they purchased $547 million worth in a single day, more than their Bitcoin purchase on that same day. This institutional appetite is connected to the fact that major banks plan to build stablecoins on top of the Ethereum network, which will involve trillions of dollars in transactions. A huge part of the story is the shrinking supply. Almost a third, 29.26%, of all Ether is currently locked up in staking. The host projects this number could eventually reach 60 to 70%, especially if the SEC gives the green light for ETF providers to stake their holdings. This continued buying pressure and decreasing available supply are setting the stage for some serious price moves. The points made in the video about institutional interest in Ethereum feel very timely. This isn't just talk anymore. The recent approval of spot Ethereum ETFs by the SEC in the United States is a massive step that turns this speculation into reality. BlackRock's large ETH purchases, as mentioned in the video, make perfect sense when you see them as preparation for their own iShares Ethereum Trust, ETH. It's likely they're building up their reserves before their product goes live for trading. The idea of nearly 30% of ETH being staked is already a big deal, but if these new ETF issuers are also allowed to stake the ETH they hold, it could create a supply squeeze unlike anything we've seen before. It paints a clear picture of a potential future where the available supply for the average person becomes incredibly scarce.